The first thing I want to do this morning is introduce you to our new Divisional Director of Reed Finance, who comes with a very distinguished name, Sherlock, the sleuth. He'll find the people you need. Peter Sherlock, will you stand up just for a moment so we could all see who you are? On behalf of all colleagues, I'd give Peter a round of applause for his recent promotion. So, well done, Peter. We're here once again to hear about the latest budget, and we have, once again, I'm delighted, David Smith, the economics editor of the Sunday Times, to tell us what he thinks about what's really going on. And I've just had a little chat with him, and he's got some very interesting, illuminating, and in some ways surprising things to say. But two things surprised me about the budget. Call me old-fashioned, but you used to read things in the news after they happened. This is yesterday's Financial Times. Osborne in tax grab on top-end property. In the first two paragraphs, it managed to tell us that the top rate of tax would go from 50 to 45p, and that stamp duty would go up to 7%. So journalists have new powers of fortune-telling, which is interesting. I think that's something new. I think it's been the leakiest budget for many years. The other thing that struck me is, in the old days, when they announced a tax cut, it used to come in pretty quickly, or a tax increase in the next tax year. But this one has been put back for a year, and we're all told it's going to happen 2013, which is different too, and I'm not sure why. Maybe David would shed some light on that. In this age of Twitter and email, I kept up with all the latest comments. The CBI said it was on the mark. That was what I got from John Cridland. George Osborne himself said it was a budget for work. On Twitter, it came out #granny tax. But my favourite comment was Ed Miliband's, actually, who said that David Cameron would now be able to afford his own horse, which I thought was a nice touch. Anyway, it's, I think, for what it's worth, and I'd be interested to know what you think, a budget that is broadly pro-business, and I think that's a good thing, because it's going to be business that drives the economy forward, that creates jobs and helps the country get back on its feet. But I'd like to start on your tables there. There's a survey. I'd like to start by mentioning that we're going to ask you as we go through the morning to complete that survey, which will be given back to David and his colleagues from the Sunday Times so that they can use your views and your thoughts on the budget for their reports and look at it and take it seriously. But I'd just like to start by asking you broadly, who was in favour of the budget and who was against it? So if you thought it was broadly a good thing, would you put your hand up now? And if you thought it was a bad thing? So in favour has it by a large majority in this room. That's interesting. Let's see how you feel at the end of David's presentation. Over to you, David Smith. Please welcome David. Thanks, David.
Thanks very much indeed, and good morning, everybody. It's a pleasure to be here, and I've done quite a few of these Reed breakfasts now. It's becoming an institution to stay up all night preparing the slides and get up very early in the following morning to come and talk to you. And it's good to see so many of you here this morning. It's as interesting for me to get your reactions to the budget, and I think, although it was positive, it was a fairly lukewarm positive just now. But we'll let's see how it progresses as we go through. I say that I'm from the Sunday Times, or it's the Sunday Times for now. And in view of recent renamings of titles by our proprietor, it may not be long before it's the Times on Sunday. But we'll see about that. You'll have seen that the new news of the world is the Sun on Sunday. So let's see what happens there. It's obviously an interesting time for us. I think for once, people say that newspapers and the media are kind of insulated from all that's going on. But certainly in the last few years, we've experienced the difficulties that many people in business have done, and circulation's difficult. Making money on the internet is difficult. So I wouldn't say that we are. We're the biggest victims of this this period, but it's been different. It's been different. You can't just sort of comment on things. It's been a different era for newspapers, and that's apart from Scotland Yard horses and phone hacking. So it's an interesting time. So what do we make of the budget? And I think the question I'm going to ask is it time? The Chancellor is encouraging us to be more optimistic. Is it reasonable to be more optimistic now that we've heard from him and we've had some announcements? As James says, most of those don't take effect immediately, so that if there is any initial effect, it's more to do with confidence rather than to do with anything substantial. But these things are this is what budgets are all about. I mean, particularly when you don't have much money to play with, and the Chancellor, as we know, didn't have any money to play with. But did he set the tone for a more optimistic future? I think that is the question I'll try and answer this morning. And I think the question for all of us is whether, when we look around, do we just see that there are just too many problems around? We're still coping with the aftermath of the financial crisis. I mean, clearly the banks are not back to what they were. Bank lending is a shadow of what it was. We're still in a period of convalescence for the banking system. Eurozone's in great difficulty. Anywhere in the world you can find problems if you choose to look at them. And of course, as we saw yesterday, the budget deficit, rising government debt is still a huge constraint on anything that the government can do. And just on the morning that the budget came out, we had very disappointing figures for public borrowing, suggesting that borrowing is coming down at a slower pace than I think many of us would have hoped. So do we look at it and say it's just horrible? There's a sea of troubles out there, or do we say that there is a light at the end of the tunnel, that things are starting to look up, that maybe we can be a little bit more optimistic? And I think that is the question about all these important economic announcements, but particularly the budget. I mean, just to set the scene, and I think the Chancellor did talk about some of this. The scene was we're 3 years on from the worst phase of the global recession and the global financial crisis. So we're now clearly in 2012, 2008-9, and particularly 2009 was a dreadful year for the world economy, worst recession in the post-war era. And although the global recovery has, initially it was very strong. 2010 was a great year for the world economy. 2011, that was when the worries started to re-emerge. So it is a recovery. It is a global recovery. And I think one reason why it's different and it feels different is maybe that the engines of that recovery are not. They're not the UK economy, they're not most of Western Europe, they're not even, although America is starting to look a bit stronger now, not even North America, but these emerging economies. So, as some of you, if you've been to these breakfasts before, may have heard me say that I talk about this as this kind of 2/3, 1/3 rule. So you don't have to go back very far to a time when 2/3 of global economic growth came from advanced economies like ours, the United States, Western Europe, Japan. 1/3 came from the emerging world. Now it's the other way around. 2/3 comes from these emerging economies, the Chinas, Indias, Brazils, Russias, Indonesias, Nigerias, and so on, and 1/3 comes from the advanced world. And that has been, that trend has been, solidified by the crisis, because most of the advanced world is still coping with the twin hangovers of the crisis, whereas the emerging world is much less affected. In the case of Asia, it had its own crisis in the 1990s. But there is, despite the fact that there is a global recovery going on, you see this picture, and the stock market doesn't always tell you what's happening in the real economy. Sometimes it goes off on its own track. But I think the stock market has been a pretty good guide to what's been happening over the past 3 years to the world economy. So almost exactly 3 years ago, stock market reached its lowest point. And at that low point, March 2009, people were worried about a new Great Depression. They were worried that every bank in the world was going to have to be taken into state ownership. Then gradually we saw the beginnings of that very strong recovery in 2010. The economic news started to get better. The company news started to get better, and saw a very strong stock market bounce through to 2010. A little bit of a reversal, I suppose quite a strong reversal in May 2010, which was the first Eurozone rescue, the first Greek rescue. But then the markets decided, well, we could cope with that. It wasn't as destructive an event as might have been feared. Stock market revives again. Then over the summer, the awful summer of Eurozone in crisis, America gets downgraded, riots here and so on. Stock market wobbles quite a lot then before having a recent run. And I think that tells how 2011 was quite a disappointing year and quite a worrying year in terms of economic growth. After 2010, which was very good, 2011 didn't see the follow through, but also a sense that things have got slightly better just in the last few months. So perhaps the low point in terms of sentiment was the autumn, fear of a Eurozone collapse. Some people saying, some quite distinguished people saying that it'd be lucky if the Euro survived until Christmas. And then the European Central Bank steps in, sentiment improves there. So we're still looking at a tricky situation in the Eurozone. We're still looking at a mild Eurozone recession, but we're not looking at a rerun of 2008-9 in terms of what's happening there. But the stock market is has told the story reasonably well. This has not been a plain sailing recovery, and of course, you wouldn't expect. This is the yield on 10-year gilts. You wouldn't expect at a time when the government is borrowing 126 billion this year, down from a peak of more than 150 billion, but still very large. Inflation, has been 5% or more, is still close to 3.5%. You wouldn't expect 10-year gilt yields to be, close to 2.5%. I mean, this is an extraordinary picture. I mean, the Chancellor talked about it. And part of that reflects the belief that the government will stick broadly to its fiscal plans and get the deficit down. But also it's because of it's a safe haven thing. It's, in the absence of safe investments, particularly in the Eurozone and particularly in certain parts of the Eurozone, gilts have become a safe haven. We'd like to take, credit for this the government would like to take credit for it. It's all to do with what they're doing. But it's a kind of the absence of alternative things, plus the fact that the Bank of England, as you know, is buying a lot of gilts under its quantitative easing programme. So an odd situation. And I think what those things reflect, what the markets reflect, is that, as I say, 2011 was not. It was an uncertain year for the world economy. That after this very strong bounce, you can see the bounce there in world trade, 10% fall in 2009. 13% bounce in 2010, followed by a stalling in world trade growth. And world trade is very important for us in the UK. We're an open economy. And you see, this is the Purchasing Managers Index for global manufacturing, easiest indicators to interpret. When they're above 50, they're consistent with economic growth. When they're below 50, they tell you that growth has either stopped or we've gone back into recession. You see the bounce, and you also see the pause in economic growth. So, things didn't follow through in 2011, and the question is whether they can now gain a little bit of momentum. The two worries are the ones we're familiar with. The Eurozone problem, I think, has been stopped temporarily because of this enormous injection of funding by the European Central Bank. 800 European banks have claimed more than €1 trillion of funding, low interest rate funding from the European Central Bank, and that has helped stem the problem. But the underlying problems of the Eurozone still remain and still have the potential to come back and bite us. And the high oil price, which we're all familiar with, the Chancellor didn't do anything about fuel duty yesterday, having done that before and seen it quickly swallowed up by higher oil prices. And I think the interesting thing about this, you'll see all sorts of charts for the oil price, but we think back to the summer of 2008 when the oil price got to, in dollar terms, $147 a barrel, easily a record level. And at the moment, it's only, it's somewhat lower than that in dollar terms, about $125 a barrel. But you look at it in sterling terms, taking into account the exchange rate, And it clearly is the case that the oil price in sterling terms is higher than it has ever been. And that explains why diesel and petrol are also at record levels. It's partly the duty, but a lot of it is to do with the raw material. And there are some people who still believe, I mean, I don't believe this, I believe it was a factor. There are some people who still believe that the global recession of 2008-9 was caused not so much by the financial crisis, but by a very high oil price. So, we should watch this quite carefully. If Iran turns nasty and so on, there is a risk there. So those are the twin threats to our economy. But things are looking better than they were a few months ago. And I say the low point in terms of sentiment, in terms of fears about the economy, were in the autumn.